Good morning, everybody. It is 8:10 a.m., January 8th. Welcome to my channel. Yesterday opened up and pretty much had an open test drive lower. Okay, couple things going on. Tariffs from Trump, right? ISM numbers came out. Jolts Jobs beat expectations. So what's kind of happening is 10-year yield is rising, right? Dollar is rising, and it's finally showing in the equity market, right? So just have to see what happens here. Now, the Fed Waller, I believe, is speaking, and he just said the tariffs should not make higher inflation. So that's given a little bounce, and that's what's going on. We were just previously gapping down, so now we're not. We're back within yesterday's range. So we'll go over some levels today. Now, without further ado, we have FOMC minutes at 2 p.m. today. Oh, welcome to my channel. My name is Steven Gonzalez. I use market profile and volume profile to find structure in the market, long supply and demand, gamma exposure levels, the most traded price of the year, the month, the week, and the previous day. All help me find structure in the markets. It's my edge. It's the way I look at the markets. And like I said, everything's on my chart for a reason. Everything gets reactions. That's why I use it, right? If I don't use it, I lose it. All right. If I don't use it, I lose it. Now, of course, I hope you guys join me every day. All right, subscribe, set an alert. Be much appreciated. All right, give you guys the lowdown, the recap, market news, economic calendar, leaders and laggards. Give basically the story of the markets. Okay, and I would appreciate if you smash that like button for me. That would be much appreciated. Now, once that market opens, you get new data. All right, you get new data when the market opens that we don't know yet. Now, combined with the Nasdaq and the ES futures analysis that I do around 8:30, that's the scenarios, right? Then that scenarios have to be applied to the new data when the market opens. Now, if I feel like my risk is worthy of putting it on, I will. And yesterday I had a pretty big trade, pretty nice trade, short in the ES. I will be making a video about that. We'll go over why I took it later. Now, once that video comes out, with my other videos, you could check them out. I post them on my YouTube Shorts and my X account at Gonzo719. Also, can check me out on TikTok, Gonzo719Trader. And now, I'm trying to build this community, a Discord, Confluence Trading. You can find that link in my YouTube homepage. Click on it and just put continue to Discord. Um, trying to build something there. It's in its infancy. Get enough people, it will start to be a full-fledged community. All right. Now, why don't we get right into futures watch list here? See what's moving markets today. All right, so we got a VIX here. That is at 19.12 VIX. The dollar is up 1.29%. 10-year yield is at 4.7 and it's up 0.54%. Crude is up 0.44. Gold's up 0.20. Silver's up 0.11. Now, the Dow's down 0.14. ES down 0.18. Nasdaq's down 0.23. 30-year bonds being sold. Russell's down 0.83. Ether's down. Ethereum's down 1.09. Bitcoin's down 1.16. So Bitcoin falling back under 100,000. So we have to see how that shakes out. Going to the Magnificent Seven. Okay, Magnificent Seven. Who we got here? Nvidia. Nvidia is up 0.95%. A huge sell-off yesterday. Made an all-time high. Then it dropped below where it was. I believe it's 50 days ago. Kind of crazy. Okay. Now, their CEO, Jensen Huang, has made some pretty stiff claims about quantum computing, saying that it's about 30 years from now, 20 to 30 years from now. So quantum computing stocks have taken a dive this morning. Now, the only leader is Microsoft, up 0.15. We're going to go to the one percenters here that are laggards. Tesla is down 1%, under 400, it's at 390. Google down 1.27%. Coinbase down 1.45. AMD, the big loser, down 2.26%. All right, moving on to the top sectors, stocks here. And we're going to start off with Uber. Uber's the leader, up 0.38, not much of a leader, followed by UPS, followed by PepsiCo. All right. Now, laggards, we have Qualcomm down 2.26, Salesforce down 0.29, Exxon down 0.39. I saw they came out with some kind of weaker profits or something like that, Exxon. So now Snowflake is the laggard, down 0.40. Let's go to my swing trade list, which just gives a broader look at the markets. Let's see with that. The leader is eBay, up 8.33%. Interesting. Carvana's up 2.09. Boston Scientific up 2.07%. Right? You don't even have one percenters. Okay? So we're going to go right to laggards. Let's see who's getting hit hard here. SoundHound down 4.03. Palo Alto down 2.46. Riot down 2.34. Palantir had a huge sell off yesterday. They're down 2.27, down to $68 a share. Mara Mining down 2.25. Hood, these are all like 1.87. DraftKings, Baba, Donald Trump down 1.79. SoFi down 1.68. HIMS down 1.52. Reddit down 1.48. Carnival Cruise Line down 1.47. I'm just going to finish out the one percenters. MicroStrategy's down 1.35. Lucid down 1.26. OpenAI down 1.17. Bitcoin ETF down 1.11. And For Solar down 1.03. And Unity Software down 1%. All right, that rounds out the swing trade list. Gives you a more broader spectrum of the markets. It's not necessarily stocks that move the market, but give you a feel of what's going on this morning. Now, sectors. This is the guts of the market. This is how I base my trading every day. There is no leader, folks. Nothing is up. Now we'll go to the laggard. We got. Now the sectors aren't down that much. Let's just go to who's red. See, technology is actually flat. Interesting. Then we have financials down 0.06, utilities down 0.17, communications down 0.17. There's not much weakness there, but much more weakness in individual stocks. Okay, that is your watch list. Now we can move on to economic calendar here. Not sure who's with me this morning. That crazy Matthew. I haven't seen some of the regulars in a little bit. G-Man, I'm not sure. Let's see. Rosita's probably too busy. Who else? Muhammad. There was a Muhammad. There was a K Trader. There's somebody else I'm not remembering. Oh, Pacific Northwest is cup pancake. Maybe because I had that heart issue. I lost some of you, but hopefully he'll come back. Oh, Rosita's here. All right, so let's get into the market news. And the economic calendar. Starting off with economic calendar, that mortgage rate. Woof. That 10-year yield, that mortgage rate, we're back up to 6.99% for the 30-year mortgage. All right, 8:15 a.m. we had ADP employment change. Consensus was 140. It actually missed. Okay, that would be a little bullish. Fed Waller, like I said, speaking already though. Says 8:30 here. Initial jobless claims 8:30. We have crude inventories at 10:30, and we have FOMC minutes at 2 p.m. I would hope to not be trading by then, unless I'm in some huge, like from the lows, and I'm just trailing my stop. Tomorrow we are closed for Jimmy Carter's passing, the morning of Jimmy Carter, ex-president. Okay, and tomorrow you got a bunch of Fed speak, but that won't matter anymore. The market is closed. All right, let's look at some news. All right, let's look at some news here. ExxonMobil stock fell 0.7 after the oil major warned that a decline in oil refining profits along with weak returns from across its operations would dent its fourth quarter income. That's why it's down. Nvidia stock rose 0.5, rebounding after the chip giant notched its biggest one-day drop on Tuesday since early September 2024. Palo Alto stock fell 2.7 after analysts at BTIG and Deutsche Bank downgraded the stock, with BTIG citing concerns over the company's growth prospects in its core network security market and its next generation security business. UPS stock rose 0.6 after Wall Street analysts from Wolfe Research and Bernstein issued more optimistic looks for the logistics giant. Adobe stock fell 1.3 after Deutsche Bank cut its stance on the software group to hold from buy, seeking more tangible evidence of monetization of the artificial intelligence capabilities. Coca-Cola stock rose 0.3 after TD Cowen upgraded its stance on the soft drinks giant to buy from hold, saying the stock's pullback is an overreaction among investors to volume concerns and worries over the impact of the upcoming Trump administration trade policies. All right, that's some news. Let me just see if I have more news. And let's go right into the juice here. Now, a couple things here. Dollar climbed for a second day while Treasuries paired Tuesday's losses as traders weighed the latest positive U.S. data in Trump's statements. Fed Waller, I don't expect tariffs to have a significant impact on inflation. Okay, you can see in this chart, which is pretty cool, when that statement was made, the S&P went up and the dollar went down. So, um, interesting, right? Interesting. Now, moving on to upgrades, downgrades. Let's see our upgrades today. Accenture upgraded. Autodesk upgraded. Cardinal Health upgraded. Carvana is upgraded today. Who else here? GL Healthcare Technologies upgraded. Coca-Cola upgraded. McCormick upgraded. That's the spices. Nasdaq Exchange upgraded. NetEase upgraded. Twilio upgraded. Travelers Insurance upgraded. Workday upgraded. All right, pretty decent upgrades today. Let's look at the downgrades. Some of them I already told you about. Let's just see. Here we go. Kellogg downgraded. Kimberly Clark downgraded. Lennar downgraded. Palo Alto downgraded. All right, those are your downgrades. Let's look at price targets. Sometimes this is not the best barometer here to look at. Let's see target raises first. Let's see Oklo target raised, Lunar target raised, Enphase target raised, Salesforce target raised, Bristol Myers Squibb target raised. Let's see. All right, target lowers here. Let's see here. Mondelez International lowered. Hershey lowered. Amgen lowered. AbbVie lowered. All right, that will do it there. All right, I think we're ready for daily charts. Daily charts. All right, give me a sec here. All righty, let's do it. Interesting. Just heard large lots hit my ear, and I believe the market is pushing up right now. Yep, we're at the most traded price of the week right now. Right here, right there. So interesting. Market's catching a bid right now. All right, let's look at the SPY. All right, what did we do yesterday? Opened up here, right? Now you'll see in futures why this was more significant. But we opened here, tested higher only this much to drop all the way down and then bounced. Okay, you can see we went back into last week's range, right in the middle of last week's range. Okay, pretty nasty. That's a pretty nasty sell. Okay, went through the 50 moving average, 90 MA daily, right? Interesting. Now, let's look. Where are we at now? 589. We are 589. We are at the lower third of the session. So that is obviously bearish still, right? Lower prices being accepted. Let's look at futures and I'll show you what I mean about certain levels. Okay. Look at futures last week's highs. See that resistance here yesterday? Couldn't make it above last week's range, right? Sold off. Hit the 50-day moving average. And now we're down here with this little doji candle. Okay. So we are in the middle of the futures last week's range as well. There's the range, oranges. Okay, there's the range, oranges. Hit the 20-day simple moving average as well. See that? Okay, moving on to the Qs. Let's check those out. So the Qs, what did we do yesterday? Opened up right here, only a little bit of buying and then sold off hard right to this candle basically at a 50-day moving average, right? Broke the 20, the 90 MA daily, and like I said, back in the middle of last week's range. Where are we at now? 515.35. 515.35. Right here. We're basically at yesterday's close. Okay? That is pretty bearish. So, accepting the lower prices. Now, let's look at the NASDAQ futures. Okay, what did we do here? Yesterday, you hit last week's highs, couldn't get over it, 20-day simple moving average, and sold off right past the 50-day moving average. And we're kind of holding the 50-day moving average right now. Okay, and now we have a swing high, right? I didn't show you this in the ES, I didn't say this, but look, come down, swing high, swing high. And do we break these lows, right? 210, let's just call it 210. Do we break those? Interesting to see, right? Because you got support, came down here, support in this candle, came down here, support in this candle. Are we going to knock on that door again, right? Let's look at ES, if ES has a similar thing. Not as, we kind of had big balance here, right? Came down. It came down to about 58.66, pushed up, made a swing high, pushed down almost to that level again. Now we have a swing high, and are we going to go for this? I would say probably 58.66 is a level to be watching. Now, moving on. We're going to look at the triple head monster. That's your bond market, your dollar, your VIX. Let's look at it together. Ooh, okay. Interesting. So we just, now you look across here. 4.73 yield is a swing high here. We almost made it there. Look at that. Almost made it there. We are getting some selling, which means buying of bonds. Okay. Right there. So it's a pretty nice wick. Now this could cascade. I don't know. I have no clue. These tariffs, I think, are scaring the market. We just have to see. All right, let's look at that Dixie. That dollar had 2 days where it kind of pushed down all the way to here, 107.73. Today it's getting some love. Dollar's just been strong. That's also usually not good for equities, okay? VIX, that's our fear gauge. Let's look at that together. All right, we are at an 18.56 VIX. We were at a 19 before. So we'll continue to have nice ranges. All right, remember 16 VIX is a 1% expected move, plus or minus in the S&P 500. All right, so we're at 18.56, so expect volatility today. All right, moving on to the main, not the main event. Well, I can call it the main event. That's your market profile. That's your volume profile. Let's do it. Let's do it. We're looking at ES. All right, we're looking at ES. All right, let's look at this together. It's your market profile, your volume profile. Okay. I'm going to expand this a little bit. Let's push this up a little bit. All right. Let me get my marker out. And we're going to look at yesterday, right? We're going to look at yesterday. Now, the one thing I want to show you first, let's do that first. I'm going to show you internals of yesterday. Okay? blood red except healthcare and energy, right? But energy doesn't move the markets, but healthcare is 10.10% weighting, right? It's kind of lost some sheen here because it's been pulling back. However, look at technology, 2.51% negative from the open. Financials 0.68. Consumer discretionary down 1.86%. Communications down 1.07%. This is where this indicator is amazing because it just shows you the weakness of that market. Okay? Just wanted to show you that I do not long when these markets are like this. I look to short pops. Just wanted to show you guys that. Okay? Now, back to there. I'm showing you that for a reason. All right. Now, yesterday, most traded price of the week was 59.87 right here. Okay. Now I'm going to split this out so I can show you what I was looking at. When the market, okay, now we opened. This is called an open test drive lower, right? Now when it drove lower, I was in a short here as well, and I got my stop hit at break even after I took some profit, and literally my stop would have never got hit, my initial stop, but that's okay. That's okay because I was looking at short pops. Now what did we do? We worked our way down to here, right? And I was like I'm being honest with you, I was getting ready to go for a walk. And I said, I want to short pops. Now, I said the only trade that I'm interested in is if we come back and get rejected here at 59.87. Okay? So when we came here, I was like, the only thing I'm interested in is failure to find acceptance back over this level. When we got rejected, came back up, I shorted 59.86 and rode that all the way down to here, about like a 30 something point futures trade. Pretty nice trade. I actually took it off a little prematurely here. It actually went deeper. And where did it go? Notice this high volume node here. That used to be the most traded price of the week, 59.36. It's exactly pretty much where it went. All right. That's the recap of yesterday. Let's go to what we're looking at, right? Now, here's a weekly profile, right? It's a rolling weekly profile. So we got value area is all this area. That's 70% of the trading volume. Okay. Then we have excess here. So it's kind of balanced, actually. It's kind of balanced. And you have the most traded price has now changed to this level right here. That level is about 59.54. Okay. 59.54 is your new most traded price of the week. Now, one big difference here, okay, is the most traded price of the month has moved lower. That is right here. That is 59.78. It's the most traded price of the last month. That puts us in ultimate balance. Okay. These are rolling. So this is from a month ago. So now you have the most traded price of the month and the week together like this. Okay. You have them together. That's ultimate balance. Big moves happen from ultimate balance. Okay. Big moves happen from ultimate balance. It's pretty significant. You can see this orange, by the way, is a profile for the last month. Okay. So you can see the volume here, right? You can see the volume in the blue profile here for the most traded price of the week. This area right here, it could be like a chop zone. So you want to see what the market does. If it holds below there, that is bearish, and we can start making a move lower. If the market recovers and holds that 59, let's call it 59.80, it can start to move back up. It's your bull bear area. Okay. Now, what do we have here to look at, right? Let's see some levels that we can talk about. All right. So obviously, I just kind of gave you the big level, right? So now just look at a couple things here. Week to date VWAP, or just in the week, is red. So these always come anchored from the week. This is anchored from the beginning of the month. It is red. It's right here, 59.78, which just means that sellers are in control of the market right now. Okay. Now, 59.80 is your most traded price of the month. Right here. Lines up with the overnight highs. Okay. So in this area, sellers will look to step in. Buyers, I'm only interested if we do one of these things. Boom, boom, boom. Right? Sellers will defend that level. Right? Now, this demand zone down here, pretty pivotal one, right? We came and bounced out of there again. Right? I believe it's a 12-hour demand zone. Okay, pretty strong. So this area down here, 59.35 to 59.26, is important, right? Very important. You have a couple lows here. And basically, bulls want to defend there. Bears want to break it. Okay, bears want to break it. All right. Now, on a big day, you always want to look at the 50% retracement of that day. That is 59.90. It happens to line up with these levels. Okay, 59.90. Okay. Now, if you look at the overnight session, okay, opened here, got this much long to this much short, that's kind of not an edge, right? We are trading at the most traded price of the week right now and the most traded price of yesterday, right here. Okay, right there. I'm not in love with the location. Okay, really not. The midpoint of the overnight session, we already have buyers here. All right, so really don't like where we're at right now. All right. Now, we're going to get right into scenarios here. No time to waste. And we are going to go for the bearish one first. Okay? Because this area is very important from 59.90, 50% retracement, all the way to the overnight lows, overnight highs, 59.75. This area, bulls want to break that area, sellers and bears want to defend it. All right, so price is here. So what I like to see, you got supply zone here, supply zone here. Okay. What I would like to see, right? Let's just say if I'm a bear, come into this demand, we bounce, the market's not that strong, we make it into here. It's all about acceptance or rejection. Okay. If we do this and we can't get above it, obviously you can roll over. Okay. And like I said, test last week's lows. That would be 58.74. Okay. And I just want to make sure you understand what I'm saying. If the market pushes up and does this, but does this, that's a rejection. Okay. And you could also fall. So this area here, I do not want to see bulls find acceptance above it. All right. It's as simple as it gets. Now, bull side. Okay. There is a big demand zone here. Okay. There is a big demand zone here. So this big demand has been bought a couple times. It's used up, but it is not used up totally. Okay. Remember, this level as well is the level bulls want to break. Now, if the market does a little bear trap, and let's say the market isn't that weak, but we come down and we break the overnight lows, right? And let's say we go down to here and we even do this, but then recover, but the market's not that weak, I would be interested in a long here, and maybe we go to here, the most traded price of the week, 59.54, and test 59.80. I think it would be gravy if you were able to find acceptance over here, if you were that low. Okay. Now, what's the other trade? Okay. if the market happened to find itself above around 59.90, right? Find acceptance. Now you can clean those singles and try to go for last week's highs at 60.36. That's all I'm really looking at. Probably all I'm interested in. Okay. Hope that makes sense to everybody. I like that plan actually. I shouldn't say so myself. Okay. Now we'll get over to the Nasdaq. Okay. Let's look at this together. Nasdaq's in ultimate balance. It actually went into ultimate balance during the session yesterday. That's why um, we pushed lower at the end of the day. Okay, now let's look at this profile. Got a distribution here. Got a little bit of a pocket here. Another distribution here. Another distribution and a little bit of excess. Okay, kind of a not so great looking profile. Yesterday, opened here, pushed up, open test drive, drove down, creating single prints, right? Creating single prints. Drove down, all the way down to, I believe, here. And then this, now yesterday's most traded price, I believe, was here, around 215.50. I'm going to have this in my video because they changed. When it came up to here and got rejected, the same thing as I showed you in the ES. Okay, it came down and that was it. It kind of rolled over. Okay, rolled over. Now, let's look at the 50% retracement of yesterday's move to 15.43. Lines up with the most traded price of the month. This is the most traded price of the week, to 14.48. This is ultimate balance. This is your bull bear line. Hold above it, bullish. Hold below it, bearish. That's how you have to look at the market. All right, price action couldn't fool you. Okay. So we have a weak high here, 214.48, lines up with overnight highs. Okay, we have a red week anchored V up for the week. We have a red anchor V up for the month in the Nasdaq. Sellers are in control. Sellers are in control. We were gapping down lower, but we're not. We're back into range, but we are holding lower prices. That is bearish. Okay, that's how you want to look at the market. Don't predict it. Analyze what the market is telling you. That's called MGI, market generated information. And don't go off one candle for 5 minutes, right? Look at structure. Look at structure. That's what I try to promote here. Okay? Structure's king. Price action can just fool everybody. Okay? Can just fool everybody. That's why I love internals. Market can't do anything the internals doesn't show. That's why I love to use it, because I know when a market's super weak as opposed to this is not that weak, right? So it's very important. All right, so let's get into scenarios. All right, let's just do it. I'm ready for it. It's going to be very similar. We're going to start with the bear scenario. Okay, this area, 214.48 to 215.43, will be a chop zone. Okay, bears want to defend it. Bears want to defend this level. Okay, so if I'm bearish, anytime we go into this box, it could be even a little touch, and you could roll over, right? Where can we go? All the way down to 209.83, last week's lows, also last month's, I believe, last month's highs. Okay, that's pretty simple. Now, anywhere in here, you can fall, right? Even if we did one of these, boop, and came through, we're going to probably go down. Okay, if you find acceptance above it, of course, there's no need to talk about it. That is not bearish. That is not bearish. All right. I didn't mention this in my other one, but this green box just represents the most traded price of this year. Okay. However, that's only this year, which is not that old, so I don't put that much importance of it. It's just I always have that on my chart, right? Because 5, 4 months from now, that will be important, right? But this is more important. The most traded price of the last month, most traded price of the last week. Okay, that's what's really important right now. Then this will be very important. Okay, hope that makes sense. Now, let's do scenarios here. I don't know if I put that up yet, but let's just do it again. And we'll go to, oh, we just did bear. I'm sorry. Now we're doing bull. Sorry, got sidetracked. Now, four, we have a big demand zone as well here. 12-hour demand, pretty big one. Came in here again, got bought up again. Okay, so again, if the market is not that weak, and the internals will show me that. If I see it, it's really not that weak, and we do one of these and bounce back up, and yeah, I'm probably gonna like to go long here, targeting probably this area, overnight highs. It will be gravy if you get into here. You can go up. Okay. Now, what's really hard is for me to, if the market just does this, it's going to be very hard for me to get long in here in this chop zone. And I have to really see how the market, and you got month to day view up right here. I'd really be like hesitant. Anything if we just move up, if we don't find acceptance here, in here. Now, by that mean that time, this market has probably made a decent move, and if it has to hold, and then we could work off and try to get it back up to last week's highs, 217.42. Now we do have the VIX elevated, so the ranges could be big. It's just that's a tough long. If I'm not down here and I'm up here, I'm not really excited about that long. You just have too much overhead supply in here to really, in this big level, and it doesn't excite me. Okay, that does it for scenarios. All right, hope you enjoyed that. If you did, please smash that like button. That'd mean a lot to me. Okay, and of course, join me every day, 8:10 a.m. Let your boys talk to you about the market. Have a cup of coffee, tea, water, whatever you like to drink. Drive to work. Listen to me. Give you the recap. Give you what's going on in the markets. Give you the story. You don't have to have a look at anything. I'm telling you everything. All right. So, of course, when this market opens up, that's when I decide to put risk on. Now, when I do, I have a trading video I owe you. I'm going to either do that today or tomorrow because, tomorrow we're off. So, might work on it today, most likely tomorrow, just because I'll have the time to do it. The market will be closed. So, if you can, I post them on my YouTube shorts. Check them out. Check all my videos out. Okay. Also on X at Gonzo719. Okay. Also on TikTok, Gonzo719 Trader. And like I said, join my Discord. Building an army here. Okay. Building an army. I'm also posting those trade recaps in that Discord. Okay, the link is in my YouTube page. Okay, let me know if you have any issues with joining. Okay, now like I said, have a decent amount of. I don't have a ton of people yet, but the goal is to start a community and to give you guys what you want. Right, goal is to go live, talk about the market. I do that every day lately, but I have a small audience. This grows. If this grows, then yeah, it's gonna be a full-fledged thing. So so that's about it, folks. Remember, today, stay patient. We got FOMC minutes at 2 p.m. All right. I hope to be done by then, way before then. All right. So everybody have a great day. Stay green. No trade's a trade.